Hello and welcome to this week's show. Thanks so much for joining us today. I'm your host Trey Winowitz and you're watching Right on the Money. Our goal for the show is to always equip you, the viewer, with accurate financial information so you can make educated decisions for both you and your family. Now we've got a great show lined up for you today, so thanks for watching. We're going to be tackling some difficult financial questions, and we want to take some things that could be somewhat complicated and make them simple and easy to understand. So come on in and have some fun with us today.
In the aftermath of Hurricane Katrina, Trey Winowitz was forced to move himself and his family over 600 miles north and begin his financial planning practice again, from scratch. Since then, Winowitz Financial has become a national success story, establishing itself as a trusted source for financial advice in and around East Tennessee. In return, Trey gives back to the community by sponsoring monthly educational workshops and annual charity events. He also hosts a weekly radio show informing and entertaining those in need of financial advice. So, if you'd like to understand more about today's challenging financial environment, if you'd like to overcome your current financial situation, and want to learn from someone with a track record of overcoming, stay tuned for some trusted financial advice that's right on the money.
Now let's get to today's main topic, the fact versus the fiction of reverse mortgages. I bet you've seen a commercial recently with some celebrity, or maybe you've heard someone you know talking about reverse mortgages. They've been around for a number of years, but with the way retirement seems to be changing these days, they're growing in popularity. And what exactly is a reverse mortgage, you may wonder? Well, according to Investopedia, reverse mortgages are a type of mortgage that a homeowner can borrow money against the value of his or her home. The key features of a reverse mortgage are these. There's no repayment of the mortgage principal or interest required until the borrower dies or the home is sold. The transaction is structured so that the loan will never exceed the value of the home. Now, on today's show, I'm not here to tell you, yes, you should get a reverse mortgage or no, you shouldn't. We're going to talk about all the pros and the cons because the truth is, I don't know your exact situation, and I tend to think that it's a family issue. Families face a host of emotional and financial decisions with their loved ones as they're aging, and they need to first sit down with a financial professional who can analyze all of their options. Then they can together decide whether it's a good solution for them or not. So here are my goals for today's show. I want to give you some facts about how a reverse mortgage works. I also want to clear up any misconceptions you may have about them. The reality is, today, costs for almost everything, including our necessities such as food, shelter, medicine, even health care, continue to rise every year. But in most cases, income for retirees stays exactly the same. As home values hopefully grow and payments are made, the equity generally increases in a property. Life expectancies have also been increasing these days, which means that many people are looking for ways to access the equity they've earned in an asset. This can be used to contribute to their retirement income. Traditional mortgages and equity loans require you to make regular payments until the debt is settled. The difference between a reverse mortgage is it gives you money from the equity in your home in the form of a loan, but it's not paid back until you move, sell, refinance, or pass away. Now, you have many choices on how you can receive the money out of a reverse mortgage: a lump sum, line of credit, or periodic payments, or a combination of any. So we're going to take a quick break, and when we come back, we'll dig a little deeper into today's topic, reverse mortgages. We've got some great information that should be really helpful for you, so I hope you can stay tuned. We'll see you in just a second for more trusted advice that's right on the money.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
Thanks again for joining us. I'm Trey Winowitz and you're watching Right on the Money. If you're just tuning in, we're talking about reverse mortgages today, and if you haven't caught the whole show, please visit our website, treyw.tv. You can watch all our old shows and catch up on anything that you've missed. For now, let's get back to today's topic. Like I said before the break, deciding whether or not to apply for a reverse mortgage is a family decision that you need to make together. But you first need to know all the facts, and there are a number of misconceptions out there when it comes to reverse mortgages. Let's see if we can clear up a couple of those for you. The common misconceptions that I see. Let's go through these by answering true or false questions. You guys ready? Now, if you have a few late mortgage payments or too much other debt, you can still qualify for a reverse mortgage. True or false?
True.
True. Neither credit nor income are used for approval. Number 2, reverse mortgages are used for desperate seniors who are cash poor but house rich. True or false?
False.
False. The reverse mortgage is an excellent planning tool that can be used by homeowners from all walks of life to enhance their retirement years. Now, some have needed cash from a reverse mortgage more than others, but the growing popularity of this product is evidence because of its benefit to a wide array of financial circumstances. In our office, we see people from truck drivers to engineers using these reverse mortgages as a financial tool. Next question. Your home must be debt-free in order to qualify for a reverse mortgage. True or false?
False.
That's correct. False. Even seniors with outstanding first mortgages can qualify for a reverse mortgage. The proceeds of the mortgage, though, must first be used to pay off the existing debt. Number 4, you still own your home after you get a reverse mortgage. True or false?
True. False.
True. You absolutely own your home and retain the title throughout the whole reverse mortgage. Once you permanently move out of your home or pass it to your estate, the loan must then be repaid. Number 5, when a reverse mortgage comes due, the bank sells your home. True or false?
False.
That's false. This is one of the biggest misconceptions. When the loan comes due, your heirs can either pay the balance and keep the home, or they can sell it. Seniors today are wisely checking into reverse mortgages as a part of a comprehensive plan. Reverse mortgage borrowers, like all retirees, are looking for peace of mind and certainty. I believe because uncertainty abounds when it comes to these traditional retirement methods. Statistics show that considering getting a reverse mortgage is done for a number of different reasons. As a means to make ends meet, for the affordability of health care, medicine, or other daily needs, also for a desire to stay in their home, and finally, to enjoy the golden years with a lifestyle and dignity that they deserve. There's a unique financial environment these days when you're talking about retirement and how to save money for your future. It's unlike anything that we've seen before financially. My job is to provide you with the best information I can give you about all the options out there so you can make the best decisions for you and your family. If you've got questions regarding anything during today's show, please don't hesitate to give me a call. It's what I'm here for. As a resource for my clients, I have a mortgage company in the office. That way, if you have questions about a reverse mortgage or even a regular mortgage, we can get you an answer from a qualified mortgage professional. Now, we've got to take another break, but when we come back, we'll wrap up this show and we'll talk about reverse mortgages and some more important facts about how they work. And we'll see you back in just a second for more trusted advice that's right on the money. Thanks again for joining us. I'm Trey Winowitz and you're watching Right on the Money. Today we've been talking about reverse mortgages. We've already discussed several of the misconceptions that are out there. Now we're going to take a look at some relevant facts that you need to know. Who is eligible? Well, you must be a homeowner for number 1. Number 2, the minimum age is 62. You then must meet with an independent HUD-approved counselor. This is a great fact, which ensures that all potential borrowers have all the relevant information before making a decision. Number 4, the home has to be your primary residence. You cannot be in bankruptcy currently. However, if you've had a bankruptcy in the past, credit cannot disqualify you. Number 6, all the liens have to be paid off at closing. Now let's talk about what types of property are eligible for a reverse mortgage. As I said, it needs to be your primary residence, and it could be a single-family home, a townhouse, a duplex, or a property up to 4 units. Condominiums and manufactured homes could also qualify, but sometimes there's restrictions that could apply. That leaves us finally with properties that cannot be eligible for reverse mortgages. Your mobile homes, your barns, and yes, you cannot get a reverse mortgage on your houseboat. Now, before we wrap up this segment, I want to be very clear about how the homeowner is protected in this transaction. The first thing is mandatory pre-application counseling, and this is from a HUD-approved counselor. Second is a non-recourse loan, meaning neither the homeowner or their heirs can ever owe more than the property's value is worth, even if the values fall. Finally, there's a payment guarantee. The funds being paid out to you as the borrower are guaranteed by the federal government. And by the way, all the disbursements are tax-free to the homeowner. Just like most refinances or other loans, all the fees can be rolled into the loan so the borrower is not required to pay anything out of pocket. Now, we're going to end with a reverse mortgage quiz. So when does the loan need to be repaid? Well, most reverse mortgages do not need the loan to be repaid until, number 1, the last surviving borrower dies, or the borrower sells the home, stops using it as their primary residence, or the family refinances their property. Now, the bottom line is this: a reverse mortgage is a unique way for you to access capital in a tax-free manner any way you choose. If you're considering a reverse mortgage for yourself or a loved one and would like to know more about these insured loans, we can tailor them to fit your needs. Please contact us to discuss your goals. And as I pointed out, we have an independent mortgage expert in our office. He's been in the business for over 10 years and available as a resource from us to you. And if you work through this reverse mortgage specialist, you'll also receive a friends and family discount on the closing cost on any loan that's closed. Coming up next, learn how people just like you benefited from a no-cost second opinion. Don't miss our Money Matters segment, and I'll see you on the other side of the break.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
Now that we're back, I'd like to tell you about some real-life folks that you may can relate to, because it never hurts to have an extra pair of objective eyes take a look at your situation and see what can be improved. Even if strategies that you're using can't be improved on, sometimes people say it's a huge comfort when I tell them that what they're doing is working well, or maybe they should continue on the same path. However, in some cases, we discover that some of the products or strategies they thought worked in a certain way actually don't. And sometimes not getting a second opinion can be very costly. If you want to be a part of this Money Matters segment, please give us a call at the office for a complimentary review. As you'll see, everything's kept confidential, but your situation may help some of our other viewers secure their financial future. So give me a call and maybe your case will get picked for the show. I want to take a second to introduce you to a few people who came in the office recently for a no-obligation second opinion, just to be sure. And these people were glad that they did. So let's take a look at this week's case. Hey, Janet, can you bring me my notes? Thanks. All right. This week's case study The husband was a retired physician, 77 years old. The wife was 72, and she had been retired from the banking system. She was a banking clerk. They came in for an annuity review. They had watched our show on annuities, and they weren't really sure what type of annuity they had, whether or not they were paying fees, and was it really accomplishing the goals that they wanted. Their main concerns, they had taken their money out of the stock market, according to the bank, and they had bought an annuity back in 2008 when the market went down. But they still hadn't really made a whole lot of money back, so they were wondering if their money was really in a safer place. The husband also had a life insurance policy he wanted us to look at. They weren't really sure if they needed to drop the insurance, if they needed to keep it, or what their options might be. Lastly, they had plenty of income from their current pensions, Social Security, and other sources, and they were really looking for a distribution or a preservation plan for their only daughter. Steps to success. What we did is we analyzed their current insurance policy. We were able to then call the insurance company on the annuity and ask them a bunch of different questions. We actually took them through our annuity fee sheet to make sure that we didn't miss any of the fees or anything like that when we were analyzing the contract. Also, then we researched other no-fee alternatives because they weren't really planning to use the money. They didn't really want to pay fees for benefits that they weren't going to use. Results. We were able to find a new insurance policy for the husband, and in so we eliminated or reduced some of the premiums that he was paying even at the age of 77. Then we discovered through using the annuity fee sheet they were paying over 3.5% in annual fees on their annuities. So we were able to upgrade their annuity to an account that paid no fees, and they were able to protect the principal like they wanted to do. Also, by helping them choose a more appropriate annuity, it put them in the position that they wanted to be in, which was to be able to easily pass more money to their heir, their only daughter, in a more efficient way whenever they did pass. Give us a call today for a complimentary review, and if your scenario gets picked for the show, you're going to receive a Right on the Money prize pack. But most of all, we want to help you. Coming up next, another opportunity for you to be a part of the show. Post it on our Facebook, tweet us, or email us your financial questions, and stick around for the viewer mail section.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Welcome back to Right on the Money. I'm your host, Trey Winowitz, and it's time for you, the viewer, to be an integral part of this show, Viewer Mail. This is the part of the show where you send us your questions about anything financial. In order to get your questions to me, you can post them on our Facebook page, tweet your question to me at TreyWTV, or email them to me at advice@TreyWTV. If your question happens to get answered for the show, you'll receive a Right on the Money prize pack just for your willingness to help out our other viewers. This package has a retail value of over $50, so please don't stop sending us those questions. Our first viewer mail question today is, I just left my employer and have some money in retirement. What should I do with it? Well, typically you have an option to roll over that money into a retirement plan with the new employer if they offer one, or into a self-directed IRA. Now, self-directed IRAs tend to give you more flexibility and options for investments. You also can sit down with me or another professional one-on-one and design an investment plan specifically centered around your needs and goals. Generally, I don't see many people roll money into the new employer plan. We do IRA rollovers for clients every day, and we have a lot of really secure IRA accounts to choose from with little or even no fees. Give me a call at the office and I'll sit down for a no obligation visit and go through all the different options for you. I look forward to helping you. And our next question is, when should I begin collecting Social Security benefits? Well, full retirement ages are based on the year of your birth. Workers can begin receiving benefits as soon as 62, but the benefits will be greater if you wait until full retirement age, currently 66 or later. Surviving spouses and children can also sometimes collect benefits a little bit earlier. If the retiree can delay collecting Social Security, this is a huge financial benefit for the retiree as well as the spouse. We usually try to design a plan that will help you maximize these benefits. So if you're watching the show and you're 5 years or less from being eligible to receive or collect your Social Security benefits, give me a call at the office and we'll schedule a Social Security planning meeting. We'll lay out all of your options and come up with a customized plan just for you. The last question we have time for today is this: should I buy an annuity, and if so, what type? Well, we actually have an entire show devoted to that exact question. The short answer is you may not even need an annuity. There are many different types available for many different types of investors. And I would tend to look for an account with a shorter term or surrender charge and no fees. You want one that'll pay you a reasonable return on your money as well. Now, let me also say there's some features that you definitely do not want on your annuity. Now, in my opinion, one of those is a MVA or market value adjustment. Now, I don't have time to discuss it today, but I would say that it's one of the things that you want to avoid on your annuity. If you call my office, we can meet and talk about how this works and why I don't think it's a good thing. We also have a complete list of companies who sell products with these benefits on there. If you own an annuity and didn't get it from us, please give me a call and schedule an annuity review so we can make sure you have one of the good ones. When you call, we'll also send you a DVD copy of our annuity show so you can watch it before you come in for our meeting. Thanks for that question. Stick around after this short break for Right on the Street. See what some local people just like you think about the stock market and other financial topics. You may actually see someone that you know.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
And we're back. This is Right on the Money, and I'm Trey Winowitz. See what some local people just like you think about the stock market and other financial topics. You may actually see someone that you know. Tell me what you do for a living.
I'm a realtor in Knoxville.
Okay. And real estate prices in general, are they low or are they high?
In general, probably since 2007, they've been lower than normal, but Knoxville really hasn't been hit like some of the other metropolitan cities, so we're doing okay.
Okay. How much lower than their existing rate should someone's mortgage, or should the interest rates be if someone should refinance?
Oh gosh, I think it's like 2%, is that?
Okay, yeah, it's a common rule of thumb.
Yeah.
When do you think a good time to refinance a property or a house would be? What are some different reasons that people should refinance their home?
To lower their monthly payment. I don't know why else you do it.
Yeah, maybe to save some interest over the life of the loan.
Oh, sure.
Yeah?
Absolutely.
And would you say real estate's a good investment for someone to make?
Definitely.
Okay.
I still think real estate's a good investment, yes.
Refinancing your house, is it really expensive? In your opinion, you think it's really expensive to refinance your house?
Yeah.
Okay, it can be for sure.
There's investments in rental properties right now.
Right.
There's still people flipping houses, buying them low, fixing them up, so there's still all around a lot of opportunities.
You think that'd be a good thing, maybe?
That'd be a good thing.
We're back. This is Right on the Money, and I'm Trey Winowitz. We're just getting ready to wrap up the show, but before we go, I'd like to tell you about an old Louisiana tradition called lagniappe. Lagniappe means to give someone a little something extra, and the way that we want to do that here at Right on the Money is to brighten your day at the end of our show. So with that, here's a little lagniappe for you. So an American investment banker was at the pier of a small coastal Greek village. Small boat with just one fisherman docked. Inside the small boat were several large yellowfin tuna. The American complimented the Greek on the quality of his fish and asked, "Man, how long does it take to catch him?" The Greek guy said, "Man, only a little while." Then he said, "Well, why didn't you stay out longer to catch more fish?" The Greek guy had enough to support his family and immediate needs, so the American asked, "But what do you do with your time the rest of the time?" The fisherman said, "Well, I sleep late, fish a little, play with my children, take a siesta with my wife Maria, and stroll into the village to watch, shows in the evening where I sip wine, play cards with my friends. I've got a very full and busy life." The American scoffed. He says, "Man, I'm a Harvard MBA and I can help you. You should spend more time fishing with bigger proceeds. Buy a bigger boat. Use the proceeds from the bigger boat. You could buy several boats and eventually you'll have a fleet of fishing boats. Instead of selling your catch to a middleman, you can sell it directly to the processor and then open your own cannery. This would control your own process, distribution, and product. Now, you'd need to leave this small coastal fishing village and move to Athens or London, maybe eventually New York, where you can expand your enterprise." The Greek man looked at him and asked, "But how long will all this take?" American guy says, "Well, about 15 to 25 years. "But then what?" Well, he laughed and said, "Well, man, that's the best part. When it's the right time, you'd announce your IPO and sell your company stock and make it public and become very rich. You'd make millions." "Millions? And then what?" The American guy said, "Well, then you'd retire, move to a small coastal village where you'd sleep late, fish a little bit, play golf with your kids, take a siesta with your wife, and stroll in the village in the evenings where you could play play cards, and drink wine with your friends." And that, my friends, is a little lagniappe for today.
That was better.
I want to personally thank you for watching our show today. I hope you found our show helpful as well as a little bit entertaining. If there's anything at all I can help you with financially, please don't hesitate to call our office. And remember, any plan that we come up with will always have three main goals for your money. Safety first, or protection of your principal, is always number one. Making a reasonable return on your money in what some would consider an unreasonable market. And number three, keeping your plans simple and easy to understand. If that sounds like something you want, I know I can help you. Also, please keep the financial questions coming. We'll do our best to get them answered on the show. I'll see you next week at 3 o'clock for more trusted advice that's right on the money.